Hello and thank you for joining us again on Capital Markets. I'm Temple Ashaju. This week, the federal government successfully raised its $1 billion Eurobond. The global medium-term program was issued at a 7.9% yield with a maturity date of February 16, 2032. Despite rating downgrade from B plus to B by S&P in the third quarter of 2016 and the recent downgrade by Fitch Ratings to B plus with a negative outlook, the Eurobond was 7.8 times oversubscribed. Now, this is largely in contrast to consensus expectations given the protracted liquidity crisis in the domestic currency market, which has weighed heavily on capital flows. In the equity market, stocks witnessed sustained two consecutive weeks of losses as poor earnings continue to permeate the market and investors seek safe haven in risk-free assets. But on the program this evening, we'll be joined by a security trader to analyze the bond offering that the federal government of Nigeria has just issued. Now let's begin with some news that we have in the capital markets this week, and we will be kicking off with the Securities and Exchange Commission. Capital market regulators and operators have identified their roles in the implementation of the 7.29 trillion naira 2017 budget, and these include but not limited to churning out portfolios-friendly policies in the area of infrastructure, agriculture, and the SMEs. At the one-day conference on Nigeria's 7.29 trillion naira 2017 budget, the Director General of the Commission, Mr. Munir Gwazo, discussed how government can fit into their plans.
The Sovereign Investment Authority and the Garanco in terms of the provision of credit enhancement facility. The question, therefore, ladies and gentlemen, still remains, are there new products in this market? Are there new initiatives or new strategies to be adopted? Most of the PEs, the pension fund administrators, and the other key investors have been yearning for new products in the market. This, to me, is also a challenge to us. What policy do we need to be changed or put in place to ensure the infrastructure projects contemplated by this budget are effectively actualized? Agriculture also remains at the heart of 2017 budget as a key of diversifying the economy. The proposed allocation to the sector is at a historic height of 92 billion naira. And the agriculture policy is expected to focus on the integrated development of the sector by supporting the development of commodity exchanges. Again, how can the capital market support the implementation of those policies? What are the sort of things that today we prefer in terms of getting our commodity exchanges to be functioning effectively? We also can talk about growth and recovery without the small and medium-term enterprises. What are the prospects for these entities within the 2017 budget? Again, what is the role of the capital market in this regard? What kind of strategy could we design to support SMEs financing through the capital market, and given that SMEs serve as the important building blocks? We know that for the last 20, 30 years, the stock exchange has initially the second-tier securities market and now ASEM. And those companies that are listed there largely have not been doing well. So what sort of policy or suggestion today we're going to recommend to government? We all know that the government is very keen in developing the SMEs. It's therefore worthy to stress the fact that SEC, as part of its developmental role, created an enabling environment in terms of regulatory framework to support financing of infrastructure through the capital market. Such framework includes rules on infrastructure bonds, revenue bonds, and all these are aimed at achieving and encouraging issuances to cater for such critical projects. The SEC's role as a regulator is to provide an enabling environment, but the market is actually owned by the operators. The critical issue now that the enabling environment has been created and even strengthened, what can the capital market operators and other stakeholders do to galvanize issuers, including government and their agencies, to leverage on the capital market as a platform for cheaper long-term funds toward addressing these challenges?
Munir Guazo, the Director General of the Securities and Exchange Commission. But then, as part of meeting the requirements for the minimum operating standards, brokers and dealing members of the Nigerian Stock Exchange may be looking to modify their operating technology. During the week, a new technology from Singapore-based company, Infotech, was introduced to the operators. At the session, the adoption of the brokerage management system was discussed. Take a listen.
This particular product, which is named as Marlin, it's a cloud-enabled service that can be subscribed by the brokers, immediately used as a broker back office and order management system. So it's not just limited to the functionality of these two functions. It includes the pre-trade risk management and real-time financial markets orders routing network. So which means the brokers can leverage the technology which is published over the cloud for transacting across the region, not just limited to one exchange. Nigerian Stock Exchange is one of the biggest exchange in this continent, and there's a lot of liquidity within within the Nigerian Stock Exchange. Neighboring exchanges and the regional brokers want to trade on a market which is more liquid. And there is a natural phenomena where the liquidity attracts liquidity, which means when the access of Nigerian markets will be given to other brokers through this service Marlin, and this will not be a direct access to the exchange, will be through a brokers. So this is a simple leverage existing technology and giving access to the original brokers, which mean attracting more market participants into the Nigerian Stock Exchange, and that will bring more liquidity and further investment options for the local community to invest abroad.
You know, like everything new, I think the practical thing to do is to start with the basic. When you get a hang of it and you begin to, because at the end of the day, whatever you're going to pay a subscription, and that subscription is supposed to be covered by the business you have done. And so the most realistic thing to do is start on the basic, and like has also been explained, you can also look at the other bouquets, if I use that word, and pick and choose whether there are any items there that you want to take, and they can configure like they have explained. But fundamentally, I think anybody who is going for this will start with the basic.